Ooh, what's going on, my fellow stock market trader and investor homies? It's your boy Kevin. Welcome back to the channel. It's that time of the year. We're wrapping up 2022, heading into the new year. And in today's video, we're going to be breaking down my top 3 stocks to buy in early 2023. To be honest with you guys, over the past 2 or 3 months, I haven't been doing that much buying. I've been skeptical on the direction of the market, and the market has just been slowly grinding down. We would get a bounce back, and then we would head back lower. Tech and growth stocks have both been obliterated, and we have seen massive amounts of selling in tech and in growth. However, there are some steals out there, some flat out steals. I've been making some purchases, and I'm going to be talking to you guys about what stocks I think are absolute Black Friday level steals. There are some literal once in a lifetime opportunities that we're looking at right now in the stock market. So let's break down my top 3 stocks in 2023. Let's get it. I'm so pumped up about these 3 stocks that I went in the closet, I got the green money jacket, and I threw it on. I dusted it off, got some starch, I hit the iron with it, and I threw it on. Because we have seen the market, we've seen the overall market really collapse over the past several months. On the SPY, we went from 472. Right now, we're trading at 382. And we've seen tech, if we look at the NASDAQ, tech has done even worse. From highs of 405, right now we're trading at 266. It would be a move up, then a move way lower, a little move up, boom, we give all that back. We've been making lower lows, lower highs, lower low, lower high on repeat, and that's left me sitting on the sideline with a bunch of cash waiting on good deals. And now I'm ready to put some of that cash to work, ready to load it up and start firing. All right, so I want to talk about the first stock. I'm going to go from least favorite to most favorite. Even though it's coming in at number 3, I think this one maybe has the most amount of potential, but it also is extremely risky due to the inherent risk of the sector that this stock is in. And that stock is going to be ticker COIN. The company is Coinbase. We have seen crypto fall off of the cliff. The crypto crash of 2022 will go down in the record books as one of the most interesting and most devastating financial collapses of all time. It lines up with, the 2008 housing market crash. What happened with FTX is going to be talked about in similar ways that Bernie Madoff is talked about. FTX and SBF, they had the Miami Heat Arena named after them. They had the biggest celebrities in the world endorsing the company. FTX had a huge market share of the crypto exchange / crypto broker market. It looked like they were going to be the player. It was going to be a monopoly. FTX was going to be the big player in the crypto exchange broker space. However, that's obviously no longer the case. All right, so crypto has been crushed, but it's probably not going anywhere. And I'm saying Coinbase is one of my favorite stocks, even though I'm not one of the bigger crypto investors out there. I have absolutely 0 crypto holdings right now. I've sold them all off. But crypto's not going anywhere. A lot of these crap shitcoin projects, if you want to call them that, will disappear. But the big cryptocurrencies, the blockchain technology isn't going anywhere. The NFT technology, now I'm not talking about individual NFT projects, but I am talking about the tech, the Web3 tech. It's not going anywhere. And I think Coinbase just got handed a gift. Coinbase was handed a huge gift by FTX. FTX is gone, their biggest competitor gone, wiped off the map forever. So when a company has a massive competitor just disappear, that opens up a lot of market share for that company. And that's what we're seeing right now with Coinbase. Coinbase had opened up trading above $400 a share. Right now we're trading at $35 per share. It has been a rough for Coinbase. Now, this is going to be a longer term play, right? We need to see multiple good earnings reports from Coinbase in order for this play, this investment to work out. But trading at $35 per share, now I'm not saying this is the bottom, but I am saying that I'm probably going to start accumulating. I'm going to start cost averaging in, buying these dips, buying any pullbacks in Coinbase stock. Crypto maybe continue to sell off. And as crypto continues to sell off, Coinbase probably will too. But it's all cyclical. There's going to be another bull cycle in crypto. And when that happens, people are going to want to be involved. And where are they going to go to get involved in crypto? They're going to go to Coinbase. Coinbase is probably the most trusted crypto exchange, crypto broker out there. So if you want to make sure, you want to ensure that your money's safe in a crypto exchange, Coinbase is probably the place where you want to be. And now I'm not saying it's safe. So if something happens with Coinbase similar to FTX, don't come back and say I said it was safe. I'm just saying they put off the persona and the perception is there that it's safe. And I believe that perception will have customers moving money to Coinbase from these other exchanges because of what happened with FTX. And when we have that next bull market in crypto and everybody and their grandmother is looking to catch and jump into Bitcoin or Ethereum, during this next bull run, Coinbase is probably going to be the biggest player in the space. As of today, Coinbase has a market cap of $7.8 billion on sales of $5 billion. That gives us a price to sales ratio of 1.5. Remember that number of 1.5. Let's compare it to a company like Robinhood. Robinhood has a similar market cap of $7 billion on sales of $1.3 billion, giving it a price to sales ratio of 5.4. All right, so Coinbase is almost it's about 3.5 times cheaper from a price to sales perspective than a company like Robinhood. They both lost a similar amount of money. They're both losing money. However, Coinbase has multiple times more sales and it is growing just as quickly. All right, so Robinhood and Coinbase are very similar companies. One is a stock broker. One is a crypto exchange, crypto broker. But they have very similar business models and similar platforms. So Coinbase not only cheaper, but who's to say a year down the road, 2 years down the road, Coinbase doesn't add stock trading to the platform. Coinbase has the infrastructure, they have the application in place. Now they can build off of that. They already have the credit cards, they already have the lending platform where you can use your crypto as a collateral to take out a loan, and if you default on that loan, then your cryptocurrency is the collateral. But I am a believer that Coinbase is in a much better position and a much better price point than a company like Robinhood, right? We have a cheaper valuation with a company like Coinbase. Let's talk about price targets and where I would be looking to start acquiring. Right now, we're trading at $31 per share. Like I said earlier, I'm not saying this is the bottom. I actually would be surprised if this is the bottom. I'm going to be looking for a rollover, break through these lows, and I'm going to start acquiring on any pullbacks. And I have a 12 to 24 month price target of $100 per share. Look how much this has fallen, right? $100 per share is about right here. We're trading at $31. That, if you looked at this chart, that move to $100 doesn't look like that big of a move, but that is a 2-3x move from where we're trading at today. I would not be surprised at all if the next crypto bull run, this thing is trading at $150, maybe even $200 plus per share. Massive upside potential with Coinbase, but also big time risk as well. Stock number 2 that I am going to start acquiring is Snapchat. And I know what you guys are thinking. You're wondering, why in the hell am I buying Snapchat? It is right now probably the worst social media stock that you could be investing in from a popularity standpoint. First on the list, most popular right now, you probably have TikTok, and then you have Google, then you have Facebook, and then you have Snapchat. Snapchat's popularity, their monthly active users, have not been growing at the pace that it once was. However, TikTok has taken over. TikTok has taken the world by storm. Everybody's on TikTok all day long. That said, there is a lot of speculation that TikTok could be banned in the United States due to its ties with China. If TikTok is banned, like it has been done for government devices, you can no longer have TikTok on a device that is provided to employees from the government federally, and a lot of states are implementing this restriction as well. What happens if the government says, TikTok, you can no longer operate in the United States? You're collecting consumer data and providing that data to the adversarial government of China. Well, if Snapchat was smart, they would scrap their entire platform and just copy that of TikTok. TikTok is growing extremely fast, and they've done it right. The platform is fun, it's engaging, and kids and even adults are on there all day long, swiping, watching video after video. Snapchat has a chance to save the company. It's now or never for Snapchat. They're losing money. They're bleeding money out of every single orifice, and they need to do something. However, that said as well, it's not very expensive. We hit highs of $83 in September of 2021, and now we're trading at $9.80 per share, right around $9 and actually $8.95. We're trading at $8.95, down from highs of $83 per share. There's tons of potential right now here with Snapchat. I have a price target of over $20 per share. That is a 2x 100% plus move here if my plan works out with Snapchat. Stock number 3 is my favorite, and I truly believe this is a once-in-a-lifetime opportunity for this given company, this stock trading at this price, and that is ticker AMZN, and you know it, and that's Amazon. Amazon stock trading at $84 per share. What an absolute steal. Absolute steal. Amazon trading at $84 per share. The last time Amazon traded this low, we were in 2020. Amazon hasn't traded at this price since 2020. It's trading at $84 per share. The valuation here is outrageous. And I'm going to be loading up on Amazon stock heading into 2023. We hit highs of 188.65. We're down more than 50% from those recent highs. And if we look at the valuation and the growth here, Amazon stock continues to grow. The company continues to grow, and it's looking cheap at this price point. Market cap of $842 billion. How can you say a company that's worth almost $1 trillion is cheap? Well, if we look at this growth, it grew 54% this year. It's supposed to grow earnings of 78% next year and 26% per year over the next 5 years. It grew 67% year over year over the last 5 years and grew sales by 28% annually over the last 5 years. Amazon's consumer base is going to continue to grow and get larger. They're going to continue to gain market share, and Amazon will continue to grow. And I just think this is a price point that we may never see again. And I don't usually say that, but I literally think we may not see this price point ever again. Think about all the money that's been printed over the last 3 years since the beginning of the pandemic. So we've increased the money supply, and everybody talks about inflation. Yeah, there's been a ton of inflation, but inflation also affects equities. It also affects assets. It makes these equities and assets more expensive because there's more money in the market to drive the prices higher. So sure, inflation is bad for your average family because that family may have a set amount of dollars that they can throw at these goods that are now more expensive. However, inflation doesn't necessarily mean that there's going to be a big stock market crash. It doesn't necessarily mean that Amazon stock is overpriced. It means that there's just more money being printed out there and too few goods with too much money chasing after the goods. And I think Amazon is cheap right now at this price point, trading at $84 per share. We do have, if we back off and look at a weekly chart, we do have a big macro trend line coming into play. If you look at it, we have a trend line, boom, coming into play that we're approaching. And I'm going to be looking to buy into that trend line, that big macro trend line that stocks typically respect. Now, $84 is a great price. I got a price target of all-time highs, right? There's no reason to sell Amazon stock. Cost averaging in, it's buying on these dips. And if you want to sell on the rips, sure, be my guest. But I'm going to be looking for all-time highs. If I have to hold for a couple years, I'm fine with doing that. Amazon at $84 a share. Remember that price point, because 5 years down the road, you're going to be wishing you had the opportunity to buy Amazon at $84. It's a new year, and I have a gift for you guys, and that's the link in the description. My preferred broker, Moomoo. No commissions, the absolute best desktop platform out there. I use it for all my options trading, my stock trading. You can buy Bitcoin, crypto on the platform. I love Moomoo, and they're giving you guys, I think, 7 free stocks valued up to almost $15,000. Bring in the new year with some free stocks, and maybe buy some Amazon with those free stocks that you're given from Moomoo. I hope you guys had a good 2022 and have a better 2023. I'm going to be putting out way more content in 2023 because I do think there are a lot of good deals out there right now. I love you guys. These are my top 3 stocks for the beginning of 2023, and I'll see you in the next video. Until next time.